Hope you all can see my screen as well. Welcome to Sliver Bullet Trading System presentation. This is your path to financial freedom, and we'll show you how. Hope you are all doing well. Before I get started, give a few seconds and read up this compulsory disclosure. That all investments in trading include risks, and you are well aware of the risks involved. So the statutory disclaimer here. I'll get started. So this presentation is going to be for about an hour, including the demo. So first 30 minutes, I will cover the slides, the idea behind Sliver Bullet trading system, and we'll cover some trading strategies, trading context, and then I'll give a demo of the software. After that, I will conclude with the price of the software, and in the end, we'll open any questions that you want to ask. So today we are going to cover some new stuff, and so I'm going to rush through first few slides so that you can get to the meat. We can get to the meat of the presentation, and you learn something new. I see some people who are joining the second time, so that's good. That's good. Thanks for your interest. So I hope you are curious to learn more about this system. So if you have any questions, post your questions in Q&A box, and then we'll take them up in the end. And I'm glad some of the existing users of Sliver Bullet system have also joined. So that's good news. Thank you. Thanks for your interest, continued interest, and we'll make it worth with the new learnings. So we all have the quest for financial freedom. Freedom in general, but financial freedom in particular, because we desire, and what that financial freedom means, that financial freedom means that we want to make decisions without any financial constraints. We want the freedom to travel, own a home, and pursue passions. Sorry about that. So let's continue. So we all want financial freedom. Financial freedom means decision making without financial constraints. We want the freedom to travel, own a home, pursue our hobbies, passions, etc. And trading, we figured out, can play a big role in achieving that financial freedom. Let's understand a little more about that. So what are the possibilities? Trading looks attractive, but there is some learning to do. Without learning, it's like a gambling. We'll be throwing darts in the dark. We won't get anywhere, and then we blame that the market is unpredictable, trading is a gimmick, all sorts of things. So it's important. The focus here is learning. So learning requires time investment, most importantly. It also requires some financial investment, because trading is complex. It requires skills, and there is no guarantees in trading. Like anything in life, there is no guarantees. You buy insurance, and you'll never have to make any claims. So is that that investment? No, that's an important part of our life, that we buy insurance. And if you make a claim, do you consider that as a profit? No, that's not profit either. So that's just a wacky example I have taken, because just to emphasize that there are no guarantees in anything. So same with learning to trade. no guarantees, but we can have probabilities on our favor. With the higher probability, using high probability strategies, we can take control of the outcome of trading. So we'll understand more in the coming slides what I mean by that. And there are some common mistakes that traders, especially newbie traders, often make, which gives a bad name to trading. And our goal will be to avoid those common trading mistakes. Now, how to avoid them? We can avoid costly trading mistakes by focusing on high probability trading strategy, and by automating those high probability trading strategies, and by using other people's money, not our money, because when we use our money, emotions get in the way and we make stupid mistakes. So to stay detached, to trade like a monk, it's better to use other people's money, and that's part of the silver bullet trading system that we advocate here. And very important here is to trade during the right market hours. What is right for one person may not be right for the other, but you need to know what is right for you, what kind of market you are comfortable with, whether you are comfortable with a volatile market or you are comfortable with a sedentary market. So you have to, that's why the right word is in quotes here, that everybody's right is different. So you need to understand the right market. We'll talk about, in our academy, the different types of market. What is the high volatility hours? What are the low volatility hours? You have the freedom to choose between those and suit to your style of trading. So in trading, we mainly focus on futures. You can use with our system, Silver Bullet trading system, you can trade stocks, you can trade ETFs, I won't say you can trade options, but the knowledge that you gain, you can of course trade options as well without the software. But futures is what our system is about. This is our preferred instrument. The reason being, futures offer customizable contracts. It is highly liquid. We can leverage large positions. We can control large positions because it's a leveraged instrument. And we can diversify across markets and asset classes. We can trade indexes, we can trade commodities, gold, crude oil, etc., even bonds. So that's why we focus on futures. How do we start our journey trading futures? It's simple. We have to open a trading account, futures trading account. Our preferred brokerage is NinjaTrader for that. And you have to access our software that comes part of Silver Bullet trading system on that platform and practice strategies that we teach in Silver Trades Academy. So it's just this simple process. Now, there are 3 steps to the path to success with trading. Number 1 is, of course, to install Silver Bullet software on the recommended platform, which in this case is NinjaTrader. And then you practice automated strategies on simulated account. So we have multiple automated strategies, and for different condition of the market, and you learn them first on a simulated account. Then step number 3, you sign up for funded trading account. We provide affiliate links to those accounts. Number 4 is you pass the evaluation for those accounts, and then once you pass the evaluation, you obtain a paid trading account. That's number 5. Once you obtain paid trading account, any profits that you make, 90% of that will be yours. 10% goes to the funded account provider because they need to profit from this as well, because they are putting their money at risk. So 10% is what they take out of your profit. But once you understand the process of getting a paid trading account, step number 3, 4, and 5, you just rinse and repeat. Our software helps you get through these steps, especially step number 4, very easily. And after passing 5, completing step number 5, you repeat step number 3, 4, 5 again and again. And that way you build a portfolio of funded accounts. You need multiple portfolio of funded accounts to diversify your risk, grow your account slowly. And it's like building a portfolio of rental properties, or acquiring farmland after farmland, or opening one franchise after the other. You need a portfolio of accounts for the long-term growth. And it's at no time I'm indicating here that it's an overnight process. It is a step-by-step process. You'll have to learn things, stick to your path, and you can go through it. And we'll show you, we'll give you more examples how to go about it, the whole thing. And what does this software do? So as I said, it will help you pass the evaluation and then get the account funded, and then and the continued trading also. So how it helps is it takes automated trades in all types of markets. We have strategies for trending market, reversing market, sideways market, all types of market. And we teach you in what kind of market use what kind of strategy. A little bit of that I will cover today, but more majority of it will be in the academy that comes part of Silver Bullet trading system. The software lets you automatically scale in and scale out. It can give you a real-time performance on the chart itself. You can see the realized profit, unrealized profit while you are in a position. It shows you the number of contracts, number of positions open, number of trades, number of won trades, lost trades, the account that you are trading, everything on one screen, so you don't have to switch between multiple screens. All you need is a monitor or a laptop to do the trading. Of course, additional monitor will help, but if you are a traveling person, you want to be able to trade from anywhere in the world, all that you need is a laptop and a good internet connection. So for those who are new, haven't done futures trading, futures contracts come in 2 flavors. One is minis and one is micros. Micros are the same as minis, but 1/10 in size. So minis are ES, which are futures contracts for S&P 500, NQ for NASDAQ 100, RTY for Russell 2000, YM for Dow 40, CL for crude oil, GC for gold. And the equivalent micro contracts are MES, MNQ, M2K, MYM, MCL, MGC. We are also experimenting with the Bitcoin. We haven't shown it here because we are still experimenting with or trying to understand the behavior of Bitcoin charts vis-a-vis our strategies in the software. So little bit of fine-tuning. The software is fine in the automated the strategy, marrying the strategy with the market condition is where we are trying to define our approach. So so that's why, but we are kind of going to come out with how to trade Bitcoins also in the next few months. So now let's talk about different market conditions. There are basically 3 market conditions. I want to draw here and show you. So let me grab my pen. There is uptrending market that goes up. There is swinging market that could go up. Then there is a sideways market, which is bound in a range going up and down. And there is downtrending market, which will go down in a very narrow range like this. Market could go down, making swings as well. Lastly, the market that's almost flat for a long time, horizontal. So there are 6 types of markets here we're looking at. Number 1, 2, 3, 4, 5, 6. So we can trade any of these markets using the software, any of these 6. Now, while any of these markets can be traded, we recommend that we deliberately avoid market condition number 4. And there is a reason for that. You can trade, there is a particular strategy to trade, which we call contrarian strategy for this market. But what happens, if we overtrade, chances are that the trades fail. The reason is a flat market like number 4 is ripe for breaking out. So if it breaks out, and if you think it's going to go up and take a long trade, put a stop here, breakouts often fail. And when they fail, they come down, and then if you short at that time, put a stop loss here, it will reverse again, and the market keeps going up. So it has taken stop here, and perhaps you have lost half of your portfolio. So that's why we recommend that you avoid market condition number 4 until you have gotten good experience. And now, in the next slide, we just provide the same picture. In a better representation. So what I scribbled in the previous slide is shown here, and we clearly show that to avoid slide condition number 4. But these are just market conditions. We need to have a context to understand these 6 market conditions. So we are going to talk about something really important now. We need to understand the DNA of the market. Okay, markets go up, go down, but what's the DNA of the market? How do we understand what the market is going to do? And we can understand what the market is going to do if we understand the DNA of the market. And what I mean by that, market doesn't go up in a straight line, or it doesn't go down in a straight line. It never does that, or it never stays flat in one horizontal line. Market moves in this fashion, again and again, go up, down, and again, up, down, down. You can extend the same thing. So in a way, the smallest unit of market could be this. Now, if we apply moving average, this unit of market is actually a S curve. It's kind of a curve. In other words, it could be, if we keep it horizontal, it could be like this. It could be like this, which is nothing but 2 S's here. one like this, and one like this. So in a way, if we take moving averages, this is one unit of the market. This is one unit. This is one unit. So DNA is a double helix, as you all know. It's DNA is double helix, right? Human DNA. In fact, animal, even plants DNA is like called double helix. I haven't drawn the helix properly. It's like helix. So market's DNA is also it's more of a sinusoidal. So now with this knowledge, what we can do next? Let me get to the next slide. So using the DNA, we can construct this basic structure of the market. Let me explain a little more about this. So we take two moving averages. Here we call them 233 SMA, moving average of 233 periods, and there is we take 21 SMA. If we take two moving averages and plot them, the moving averages can be flat, it's 21 and 233. They could be flat like this. They could be in this fashion, or they could be like this, 233 and 21. Put them together. If 21 SMA is going up, it could come down as well, or it could come down this way, or it could come down this way, go up this way. So if you look at it, look at the diagram that I just showed you. This is what this picture shows. Let me move it here. So now this line is 21 SMA, and this red line is 233 SMA. All right. Now in the previous slide here, if we map these conditions, market conditions, these 6 market conditions on top of this DNA diagram of the market, what do we get? Market could go up like this, right? Market could go up, making swings. Market could come down in a very narrow range, or market could come down, making swings. Market could stay flat, but in a range bound. This is a range here. Or market could be flat in a very narrow range here. Now there is a reason. These are not random pictures here that I have drawn. Let's start from this place. Market is volatile, it's flat and going nowhere, and it slowly starts to climb up. So that's market condition number 1 that I showed in the previous diagram. So market condition number 1. And when it goes up, when it comes down, when it goes up, volatility is low. Volatility is not, it goes down actually. Here volatility was high because market was fluctuating. As it goes up and in a very narrow range, volatility goes down. Volatility goes down. So what will happen after a long period of low volatility? Naturally, the volatility will go up. So now when it comes down, it's with high volatility, which it makes a fluctuation. So the point here is, market doesn't stay in one state all the time. It moves in and out from high volatility state to low volatility, and from low volatility state to high volatility state. It goes back and forth. It's just this back and forth nature of the market is what we need to understand. From if it goes up, it comes down. If it comes down, it goes up. If the market is highly volatile, volatility will come down. If it is flat, of very low volatility, volatility will eventually go up. We just need to understand that. And when volatility goes down, when the market is going up, in a steadily in a very narrow range, volatility goes down. And once it goes down, what happens? The next phase of the market is that volatility will go up. So same thing here, if it goes down slowly, volatility will go down, because now market is predictable. But when it goes up suddenly, it makes wild ranges and starts to jump and run up, in its course. So volatility goes up. Here volatility comes down. I wouldn't say that it comes down big way. And this slant is a little more than what I wanted to show here. Usually, if the slant is very gently down like this, then volatility could go down even if the market is going down. But with this angle, this 45, if the angle is 45 degree, I have to correct myself that volatility may not be going down, but it could be going up. But what I want to show here is a very gradual slide in the market. Very gradual, not at 45 degree angle. Maybe next time I kind of draw a picture of different slope. So now the most fundamental thing we need to understand is what happens at the turning points. Here market is going up. Now when it is about to come down, what happens at this point? This is most important thing for us to understand. What happens here is an exchange. Lot of exchange between buyers and sellers. There is a kind of, you can imagine, it's like you are going in a highway. And you have to. This is an interstate, and from that you take exit for another interstate. Here you are going on maybe 80, and here you want to take an exit to 55. I believe there is an exit to 55 on 80, but you get the point. So what happens? You take an exit. Exit takes you to a new highway. And what's there in the exit? Typically, exits have restaurants, restrooms, other interests like that people want to, maybe a truck stop and things like that, a hotel. So why is that? Because an exchange is possible at the exits or at the turning points. So same about the market. So when the market is about to make a turn, it has to do some kind of transaction between buyers and sellers. People have to pause, they have to refresh, they have to buy food or get fuel and things like that. So in that stage, the market becomes volatile. There's a lot of volatility. So here, market went up steadily, and then let me draw it in a different color. Maybe that will be helpful. Okay. So there has to be a volatility. If the volatility was down when the market was going up, now the volatility is high. So that is the indication that there is a likely turning point in the market, and that's when you get yourself ready for changing the direction or taking trades in the opposite direction. Now, same here. In the bottom also is the same thing. When the market is coming down, and slowly, not too much of I'm not saying it's coming down in a big way. If it's coming down slowly in a low volatile fashion, the volatility will increase here. There will be an exchange, a fight between buyers and sellers, and that's the time we know that market is going to make a turn. And same here, market is coming down or going up with high volatility. Here at this stage number 4, the volatility will have to come down. And another thing we have to keep in mind is these moving averages, 21 SMA or 233 SMA. They act like magnets. They attract prices back. If price goes up, they have to retrace back to their moving averages. And this 200 as a moving average is one of the key magnets. Same with 21 SMA. If the price has gone up too far away from 21 SMA, you can safely assume that market will retrace back to 21 SMA and you can get a scalp here. So always there is a mean reversion. Mean reversion. So if you see this in the market, take a contrarian trade here and you make some 8 to 10 ticks here. Just do this and you'll be profitable for your life. Here market has moved away from 233 SMA. It has to collapse now. It has to collapse. It's just a matter of when. Just a matter of when. You will know when the market has become volatile. And if you have patience, you have time, if you wait out, if you manage your risk, it will come down, it must come down, and this is your profit. This is your potential profit, this whole path. And you won't even realize how fast it comes down. If you blink, market has moved away from you. And that's where the automated software comes in picture, that you are ready with the strategy and take up 2, 3, 4 scalps here and you are done for the day. Sometimes even a couple of days. And now just, I cannot spend more time on this because this is just an intro webinar. But just to tell you that this is just one way of looking at it. Market could be like this as well. This is 233 SMA. Or market could be like this. 233.21, because 233 is showing. I've shown here as a horizontal line, but it not necessarily horizontal line, not all the time, because that moving average could also be sloping up or down or remain flat. So these are 3 possibilities. So these are all are covered in our detailed training. So The more important thing for us to understand here is we have specific strategy for each of these market conditions, and those strategies are programmed into the software. You have to just choose those software. Looking at the diagram, we provide the cheat sheet. It's in tabular format at this moment. We are going to make it graphical in graphical format in next week or so, and that's going to be available for you. So how this software helps? It's just provides you a guide rail of in a bowling alley or training wheels in a bicycle. So hope intuitively you understand this idea here. It helps you keep in your lane. It helps you take profits, lock in your profits, or take your stops without letting you, falter from your execution, because these are high speed systems. The market is a high speed market. If you miss a trade by a tick, a good trade could go away from you. So the software provides the accuracy and timeliness in your trade execution, both profit taking and closing. So now let's take a look at the demo of the software. So those who are already using the software, just you can enjoy watching it or ask any questions. So, but those who are new, I just want to show this Sliver Blade Pro is the software. There are different parameters mentioned here, which are like max loss, profit target. What this means is that if this number is hit, the software will stop. It's a way to alert you that, okay, you are done for the day, don't overtrade or take the profit and go home, don't give it back to the market and things like that. So you can modify in all of these. ATM 1, 2, 3 are the automated trade management settings. You can define number of contracts, profit target, stop loss using these ATMs. And there are other parameters that we cover in our training. So I enable the software, and you see this bar, very non-intrusive, one-line bar with multiple buttons. So we have ATM buttons in yellow color, strategy buttons in pink color. These long and short buttons are automatic trading buttons. Buy, sell are manual trading buttons. We have included manual trading also, because even though platform gives you ability to trade manually, when you start the software and the platform trading cannot work together. So we have included the manual trading in the software itself, and there is a use for it. Sometimes you need to take manual trading as well once you get more experience. And then there is aggressive mode. The default is conservative mode, but you have aggressive mode also if you want to be aggressive. Then there is scale in button. You can add positions, trades to existing position. And then there is a Heiken-Ashi button. It gives you a good understanding of the trend. If you know about Heiken-Ashi candles, it's sometimes very useful candle in checking the direction of the market. And now I am going to set the market at about 8:30 when the market actually has opened up. So yeah, so in 2 minutes market will open up, and we'll see how what trades we want to take. So here I have set the timer at about 8:28. Increase the speed to about 10x. 10x could be a lot because I'm showing you the trades of NQ. And Okay, so market has opened up. So here, this was yesterday's close. Now market has opened up. So I would like to. My bias is on the long side. So I should be trading, taking long trades, but market is too high. So I want the market to come down a bit before starting taking long trades. So one more thing I want to say here. So you see here number 43. We have recently introduced this week only. We are testing with this. This gives you a signal of upcoming a possible trade. That there is a possible trade. So when you see this, you have a choice. You can decide to go for long trade or short trade, depending on where the position of the this indicator, this number. So for those who are already use this software, bear with me as we promised to give you all the updates to the software. This we are testing, and in the next couple of weeks we will release it for you as well. Those who buy it new, it will come with this feature as well. So this shows that a trade is imminent, and you can click long button to take the trade. So I'm not going to take the trade because I saw the risk is very high. This 49 number you see after the bar close, it showed 49 and 111. This is a very high risk for me, so I turned off the button. So it gave me an indication that a trade is about to come, but you can. But again, in our style of trading, we use very big stop loss. So this risk won't discourage me, but I wanted to be aware of this feature, and maybe especially in the beginning of the market, I would avoid such big risk. Even we should avoid all the time, but especially in the beginning of the market. So I'll let it keep running and see if the market comes down further. So I want to take trades closer to this moving average. That is a sweeter spot. Not that I cannot trade. I would have been profitable if I'd taken a trade here. I would have been profitable, but I want to be conservative. So okay, one more signal I saw, then it disappeared. Okay, now I feel better. I will perhaps take the trade here and see how it goes. Okay, market is still going up, which is good because my bias today is on the long side, and I want cheaper trade. Okay, all right. So one trade happened in matter of seconds, made $40 just with one contract. I'm showing it with one contract. Once you start trading with multiple contracts, this will multiply. I just wanted to show you the default strategy. There are 4 other strategy buttons here. None of them I pressed. Means default strategy is in action, and I just made $40 with that. And then if I used ATM 3, I'll use ATM 3 and show you how that works. So ATM 3 uses 3 contracts, and so here one short trade signal is coming, but I won't take short trades because my bias today is on the long side. Signal for the short side, but I won't take that. So I'll wait for a long trade. With 3 contracts. one more coming. See, if it is too risky, if it is too far from the moving average, it won't take, saying that is very risky, 24 ticks away. So if I want to go aggressive and ignore this risk level, I can press the aggressive button and take the trade and see if it works. So yeah, one more trade. Yeah, so despite it being a little risky, the trade was taken because I pressed the aggressive mode. I made $65 this time. So it was a very small tick. I think ATM 3 was only for 4 or 5 ticks that profit. That's why 3 contracts gave me only $65 of profit, which is fine. You know, if I'm using more contracts, I should reduce my profit target. That way, if it goes against you, you won't. If you at least with a small, you make profit. You close the trade quickly because you are trading more number of trades, so more number of contracts. Sorry, I'm bit, okay. So one more trade happened so quickly, and that too because I'm running this playback in 20x speed. If you guys are interested, I can slow it down, but interest of presentation. So market opened at 8:30, and in 20 minutes we made $170. So we trade for like we recommend trading for like 8:30 in the morning till 10 o'clock and be done with it. You make anywhere from $200 to $300, $400, keeping the greed low, and with multiple accounts, multiple funded accounts, you can imagine you can multiply this number. If you are trading 3 funded trading accounts, by now it would have been $510. $510 in 20 minutes. But it's not going to happen for you from day one. You have to. We recommend that you build the portfolio, go slow, understand how the market works, and how to apply different strategy of the tool to the market, and be profitable consistently. Consistency is the key, not fluctuation in your portfolio. Profitability is bad thing. If you make $10,000 this month and make a loss of $5,000 or $6,000 next month, it's not good. If you make $2,000 consistently every month, that is scalable. That is scalable. So that's about the demo. If you have any questions, feel free to post it in the chat box, and I will take it in the end. But coming back to the presentation, I just want to share this. So we just completed the demo. So if you are interested in purchasing the software and the system overall, which comes with education and all that, there are 2 variations. One is Lite, one is Pro. All our customers have purchased the Pro version because it has more power in it. It comes with multiple ATMs, multiple strategies, automated scaling, and aggressive mode. Whereas the Lite version comes only with 1 ATM, 1 strategy, manual scaling, defensive mode. So what I showed you today is basically 2 ATMs, only 1 strategy I showed you in the demo. I did not show you automated scaling, it's only manual scaling. Once I used aggressive mode, that's it. So the point is, Lite version is good enough, but you would want to go with Pro version because it has more options available. So the software comes with training handbook and 2 months of group training and support. But the promotion that's we've been running is to give 30% off. So that brings down the price of Pro version significantly to $3,780, and the Lite version to $3,240. And it includes 2 months of Sliver Trades Academy, which we launched last month in December, actually, and not December, actually January. So you have access to all the training. You have video recordings there to watch. You have cheat sheet to map the trading strategy to market conditions. And we continue to update it with more and more insights. For example, the edition of DNA of market is the new one. So similarly, new concept, new insights we will keep adding to make you more, a better trader. So it also comes with if you a silver lining offer. Silver lining offer. Again, we have played with the word silver a lot here because our business is sliver. We call it. We use instead of silver bullet, it's sliver bullets. Instead of silver lining, we call it sliver lining. So we played with the words. So the silver lining offer is not just this 10% or 30% off, but also if you make the purchase today, we'll give you sign you up with $50,000 evaluation account, which is available at in fact 80% discount. It's not 70, it's 80% discount. It's available at this moment. Which what it means is, it will give you a drawdown of $2,500. If you make a profit of $3,000, the account could be funded. You'll get paid funded account. Of course, you have to pay a fee to convert it to a funded account for the lifetime of data and all that. You can trade 7 contracts, 7 mini contracts or 70 micro contracts. So it gives you a lot of flexibility in structuring your trades. And the promo is about giving you a one lifeline. So how these evaluation accounts work is you pay a monthly subscription for the account. But if you fail, there are 50% chance that you would fail the first attempt, because of various reasons. You are getting your getting a handle on the whole thing. You're learning, you're experimenting. Sometimes you're gambling. So you blow up an evaluation account. So if you do that, of course, you can purchase the subscription again, a new account, but we give you a lifeline. We will pay for the next month for that evaluation account. So a small incentive if you make the purchase today, the silver lining offer. So if you want to start the journey, go to slivertrades.com and choose your edition. Click on the buy now button, and then select choose your option and use the coupon launch 30 or launch 10 to make the purchase. So here I want to add that you could get a certificate like what we have shown here. If you pass an evaluation, you get certificates from the funded account provider that you have passed, and you are eligible for paid funded account. So you pay a nominal fee that they charge to convert evaluation account to a funded account. You pay that and you get a funded account. So once you get a funded account, you build a threshold, threshold for stop loss, and above that threshold, any profits will be yours. So here, this picture is from a week ago. It shows the profitability of different accounts that we are trading. So we have more accounts, but this one particular set we are showing here. So 4 of them are 25K account and one is 150K account. So at different profit levels, the evaluation accounts. As we pass more accounts, we get more certificates like this. So, do contact us, and if you have any questions, I'm ready to take that. So please type in your questions in the chat box. any questions? So yes, it's two versions, and maybe in future we'll limit it to only one version, because just for comparison's sake we are showing two versions. All our customers have purchased Pro version only, and we have priced it such a way that uh, um, the Pro version is more attractive. It's because it gives you more of everything. We want you to use a Pro. Just for a difference of $500, I would say Pro will be much more than Lite. And of course, Lite is enough to make a living, the Lite version. But just wanted to kind of comparison sake. And Pro version gives more freebies and stuff. So the Academy access to the Academy will be for 3 months. So when you purchase, all the details you'll be able to read. Before purchasing, there will be a link to an agreement which you can read up, and that's the agreement you will sign after making the purchase. We'll send you an agreement. Basically, this license, software license, will be for one computer, and so we'll have to take down your machine ID so we can install your software, enable your software license for your machine. So, and whatever things that you need to understand, you will get to know by reading the agreement. So you go to slivertrades.com, you choose your software, come here, and here is the agreement. So you can read this up and then make the purchase. So in the next slide, you will see 30% discount, and this discount is for this month only, because since we have, as we make our software more powerful, we have been increasing the price, because that's how it goes. More powerful we make, we'll have to charge more. But if you purchase now, any upgrades for next 1 year will be available to you for free. We will not charge you for next 1 year. All the upgrades that we make to the software. So, so don't. If you wait till next month, of course, next month's price will be applicable, which we don't know what it will be, but that will be applicable. Now, once you purchase, you also get access to the Academy. Do go through all the material in that Academy. There is a very useful information. We keep updating it on regular basis, and it gives you a lot of insights. So this is how the Academy looks, and these are the lessons included, and it's growing. It's growing. It has training videos which we added recently. It has trading cheat sheet, trading process, trading hours, how to use the software, all that. So, and we look for feedback. Based on the feedback from our customers, the type of questions they ask, we make our Academy more robust. And one more thing, Sliver Trades laws. These laws are important. This kind of gives you the perspective or the context of the market. What to keep in mind, what now, what to ignore, and things like that. So those who have already purchased the software, they are familiar. They might be familiar. If you are not, please do go through them, and feel free to ask questions if you have any. So I don't see any more questions, so I will keep this presentation on for a couple of minutes before closing it. So thanks again for joining. Thanks for your interest, and especially those who joined repeat second time, and especially those who have purchased the software and still joined and tried to learn something new. Our goal will be to teach something new to our traders. make it more useful and valuable to you all. Thank you very much. Have a good rest of the weekend.